Good day, students. Once again, I have now going to spend some time doing this question. And this question is on the preparation of the income statement according to the direct method. And after I have evaluated the question, I thought that I can say it is at an intermediate level. It's not advanced and it is not a basic question, but a bit intermediate. So our main focus is to compile the income statement or prepare the income statement according to the direct method or the contribution method. Now, that being said, let me go to the requirement. It says we are required to prepare the statement of profit or loss for the quarter using the contribution approach, which is the contribution approach. It is sales minus variable cost. Then we get to the marginal contribution. Then you say minus fixed cost, we get to the profit for the period. So that's what the contribution approach has been teaching us. Then number 2 says for every pair of a roller blade sold during the quarter, what was the contribution towards covering the fixed cost and towards earning the profit? So now I will explain some one critical thing when it comes to the calculation of the contribution to the fixed cost, because this is the portion that is covering or contribute to cover fixed cost, and how this links with the calculation of the break-even point in units. Now let me read the information provided, and the reason why I always read the requirements, because I want you to be aware of what is required so that you align with what you want to know or want to understand or want to learn in this exercise. So that if the requirements don't speak to maybe the topics that have been covered in your course or subject, then you might immediately don't spend time or not spend time watching a given video. Now, this exercise 1 says the Sports House Ltd is a large retailer of summer sports equipment, and a statement of profit or loss for the company's roller blades department for a recent quarter is presented below. So this is information for a specific department, meaning there are also other departments that are within this company, which is the Sports House Limited. Then B, that may it, but we are focusing only on this department. The Sports House Ltd profits or loss statement of roller shutter blades department for the quarter that ends on the 30th of April in the year 2018. So this is the income statement that is presented to us. Under our sales, we have the amount of 150,000 rands as our sales, and our cost of sales, it is 90,000 rands. And if we say sales minus 90,000, it gives us what we call the gross profit, and the gross profit, it is 60,000 rands. Then after we deduct the operating expenses, which is sales or selling expenses and administrative expenses, and you can see that these are these are expenses that have to do with the operation of the business. Then our total operating expenses amounted to 40,000, which is 30 plus 10, and that gave us an amount of 40,000. And obviously, if we say 60,000 gross profit minus 40,000, this will give us the net profit of 20,000 rands. Obviously, tax still has to be taken into account, so we can just say it's a profit. But it's a net profit after all the expenses have been taken into account, excluding taxation expense and finance cost where necessary. Then after now, we are told that the average selling price for a pair of a roller blade or blades is 750. So now the selling price for one item is 750, then meaning we need now to know how many units were sold, because we only know the total sales revenue and each unit was sold for 750. Then we need to know how many units this company sold. So now meaning it will be the total sales revenue divided by the selling price, and we discover that the company sold only 200 units. And if you say 200 times by the selling price 750, you get the sales revenue of 115,000 rands. Then now this information was necessary specifically for the calculation of the number of units that were sold. So just to recalculate that, 750 times by 200 is 150,000 rands. It further says to us that variable selling expenses are 50 rand per pair of a roller blade sold. Remember, we have our selling expense and administrative expenses, and they did not stipulate which portion of this expense is fixed and which portion of this expense is variable. So now this information is telling us more details regarding the fixed and the variable part of this expense. It says the variable selling expense are 50 rand per pair of a roller blade sold, meaning it is 50 rand for every unit that we sell. 50 rand will be a variable cost in terms of the selling expenses. So now the question is, how many units were sold? That's why it was crucial for us to calculate that 200 number of units were sold in this given period ending 30 September in the year 2018. So now 50 rand for every unit is a variable selling expense. Then we multiply this by 200 and we discover that 10,000 of the selling cost is fixed. 10,000 of the selling expense is variable. So now 10,000 becomes variable and 20,000 of the selling expense then becomes fixed, because they said 50 rand per unit or pair of a roller shutter blade, it is variable. Then the remaining balance of the expenses are fixed. So now, which is the 20,000 out of that 30,000 then becomes fixed. So take note that the sum of these two end up giving us the same 30,000 rands, and it was supposed to be that case. So now that will be the 30,000 we are talking about. Then after we are then now given the next information where it says that the administrative expenses. Now this is where we are. Remember, we started there under the sales and we came to the selling cost. Then now they give or they bring our attention, or this exercise give our attention or bring our attention to the administrative expenses now. The administrative expenses are 80% fixed and the remaining balance are variable. So now again we need to split this into fixed and variable. And they are telling us that 80% is fixed and 20% is variable. So now let us look at how much the 80% that is fixed and the 20% that is variable, because a percentage is up to 100%. So now out of this 10,000, then obviously 80% will be 8,000. So 8,000 of this administrative expenses are fixed. So now meaning 8,000 is fixed and 2,000 is variable. So now take note that in the requirement, we were required to prepare the statement of profit or loss for the quarter using the contribution approach. And I said to you that the contribution approach, which is the marginal contribution approach, it says sales minus variable cost. So it was very necessary for us to be able to extract how much the portion that is variable out of the 10,000, and how much of that 30,000 is variable, which is 10,000. So that when we are saying sales minus variable cost, we are able to take into account the 10,000 that is selling expense variable and the 2,000 administrative expense that is variable. So it was very necessary for us to be able to analyze that information. Now, on that same note, we then go to the last information that is given to us in the last sentence. The last sentence says to us that the company does not manufacture its own rollerblades. It purchases them from a supplier at a cost of 450 per pair. Then now the question will be, how much is our purchases? And we know that purchases will be inventory, which is also a variable cost. So now, if we buy each unit for 450, then how many units were bought? We already know that we bought a total of 200 units, meaning when you say times this by 200, this will give us the sale or the purchases, which is 450 times by 200. We get our purchases as 90,000 rands, and you can say that those purchases remain the same at 90,000 rands because we bought those units and we sold those units. So now this is just the confirmation of that 90,000 that we see. So you can see that the cost of sales is only made of the purchase cost of the inventory. There is no fixed cost that is included in this cost of sales, but it's the variable purchases of 90,000 rands. Now that has been taken into consideration in terms of the analysis. Remember, this is a variable cost. Purchases are variable cost. So now we do have our variable cost number 1, variable cost number 2, variable cost number 3. This will be our focus in terms of the variable cost. So now we do have these 3 variable costs that we need to account for. Therefore, now I can immediately respond to the question that said, prepare the statement of profit or loss or the income statement for the quarter ending 30 September 2018 using the contribution approach or the direct method or the marginal income statement. So now we are responding in this question, which is the first requirement, requirement number A. We are doing the statement of profit or loss. Statement of profit or loss. And the statement of profit or loss is at 30th of the 9th month in the year 2018. And now we know that this statement starts with sales, and we already know that our selling price is 750, and we multiplied that by 200, and it gave us sales revenue of 150,000 rands. This does not change. Then after we say less variable cost. Then when it comes to our variable cost, we have purchases, and our purchases, they don't change. They amount to the amount of 90,000 rands, which was 200 multiplied this by 450. We have shown those calculations. Then after, we need to deduct the selling cost or the selling expenses, and we have calculated that our selling expenses come up to an amount of 10,000 rands. Let me just remind you or remind us of that calculation. Remember the selling expense. There we do have the selling expense, which the 20,000 was set to be fixed. And remember, the 20,000 was calculated by saying 50 times by 200, the number of units that were sold. And we sold 200 units. Just to reaffirm that calculation, it was 200 times by 50, and that gave us a total of 10,000. And that, let me just confirm, we said 200 times this by 250 times by 200 units, that gave us 10,000. And we said the 10,000 is variable. So now that's where this variable part came from. And the remainder then became fixed. So the 10,000 was coming from there. Then we just record that 10,000. Then we minus the administrative expenses. Administrative expenses. And administrative expenses were set to be 20%, or it was the remaining balance. We calculated that fixed was 8,000, which was 80% of 10,000 rands, and obviously the remainder will be 2,000. 20% of 10,000 will be 2,000, and that 2,000 was our other variable cost regarding our administrative. So now we have our 2,000 being another expense that is variable. So now here are the total expenses that are variable that must be taken into consideration. So now we say sales, of which our sales, they don't change regardless of the method in which we are compiling the income statement. Either you are using the absorption method or the direct method, sales revenue always remain the same. So now here we get to our marginal contribution. Then our marginal contribution will be the sales, or let me first calculate my variable expenses. 90,000, which is purchases, plus 10,000 plus 2,000. Then this gives me 102,000. I get an amount of 102,000. 102,000 minus 150,000. This gives me a total of 48,000 rands. And this 48,000 rands is the total of the contribution in total. This is the marginal contribution. And I want to bring your attention to the fact that this is the total marginal contribution in order to manufacture and sell, or in order to buy and sell 200 units. So now if we want to know the contribution per unit, remember I'm just drifting now away for a little bit because I'll use this bit later on in the second question. So if I want to know my marginal contribution per unit, this is not part of this question now. I will divide here by 200, and when I divide here by 200, it will be 48,000 minus 200. Then my marginal contribution now per unit will be 47,800. 48,000 divided by 200, it will be 240. I was a bit wondering why is it so big. It will be 240. So now this is per unit. I will explain this in line with the second question. Now it's not applicable here, but just remind yourself of that contribution per unit. Then I'll just divide and take that to 40, which will be the contribution to fixed cost. Now we then have to less fixed cost. We have to less our fixed cost, and we deduct fixed cost. Our fixed costs are divided into two types of fixed cost. We have selling and administrative fixed cost, because part of this selling cost was fixed and part of this was fixed, and that was 8,000. So now this is where our focus is. Therefore now we have selling costs that are fixed, and the selling costs that are fixed amounted to 20,000 rands, and administrative fixed cost, administrative cost or expenses amounted to an amount of 8,000. Just to confirm that is 8,000, not 2, or yes, 8,000, which was 80% of 10,000. So now our total will be 28,000 rands. So now 20 plus 8,000 will give us 28,000. I prefer to write the brackets to indicate that it's a negative, although this is a sign that I am deducting whatever is below. I'm just used to it in case I forget to say less. So now then I will get to my net profit at the end of the day. Then I'll see now how much will be my net profit. My net profit will be a total of 48,000 minus 28,000, and this gives me a profit of 20,000 rands. Remember, this profit should be the same as the profit that was given based on the method of the income statement that was given in the exercise. Net profit was 20,000, and again our net profit is still 20,000. Nothing changes, but the method of calculating the profit is the same, is different, but the profit remains the same. Be mindful of that too, but I'm not sure if that is crucial for what. Now we have calculated and responded to the first requirement, and you must be able to convert a given income statement into the required income statement. In this case, we were given an income statement which I am not sure either it was based on which method, but we had to convert the given income statement into the required income statement. So if they wanted, they could have required you to calculate maybe using absorption, but that will still be the same because we don't have a fixed cost that are included there in the cost of sales. So now that wouldn't be adding value, honestly, because you'll be just copying and pasting almost, in fact, the same thing. So we have done the income statement according to the absorption or contribution method or the direct method. And now the second requirement says, for every pair of roller blades sold during the quarter, what was the contribution towards covering the fixed cost and towards earning the profit? Now we need to first know how much the selling price. Remember, we know that it will be 240 that I calculated previously. If you remember, when I divided this by 200, it gave me 240. Now I know that my selling price per unit is 750. Then I need to minus my variable cost per unit. And I just want to have my variable cost per unit. Let me just do that without wasting time. If I divide here by 200, remember my figures are all in total. Now if my figures are all in total, if I want, I can just divide the total contribution by 200, or I can divide my cost by 200, then minus the selling price. I'll still get to the same 240. So I have 102,000 of the variable cost divided by 200. This gives me 510. So now I just want to proceed on that same note. Then now we are calculating the contribution in the second question. Contribution per unit, or contribution per pair of roller blades. And we know that it will be a selling price, and we know that the selling price is 750 less variable cost, and my variable cost per unit is 510. And if I say this minus 750, I get to the same 240. Hence I say that there's no necessity for you to be doing it my long way. Just take the contribution, total contribution, divide by total units. You get exactly to that 240 because we have already done the calculations. So now that will be 240. So now we have our contribution per pair of roller shutter blade, which is 240. Now remember, we have our income per unit. For every unit we sell, we receive or we get 750. And there are variable expenses, and those variable expenses per unit or per pair of a roller shutter blade of a roller blade come up to 510. So now if you say our income minus the variable cost, we get to a profit of 240. Now, since we have deducted the variable expenses from our selling price or our sales per every roller blade, we get to the amount that will contribute to fixed cost. So now meaning for every unit we sell, this will reduce our fixed cost. For every unit we sell, this 240 will reduce our fixed cost. That is why now when the total contribution, let me write this one here. It's not necessary for this question, but important to understand. When the total contribution equals fixed cost, the business is at break even. When the total contribution equals fixed cost, the business is at break-even point. And now let me just repeat this because it's very crucial. That is why when we are calculating break-even point, we say fixed cost divided by contribution. Now for every unit that we sell, the 240, which is after we have deducted variable cost from the fixed cost. Now this amount of 240 will contribute to fixed cost. It will go to the amount of fixed cost and reduce them. And the second unit to get to be sold, we take 240, we reduce our fixed cost. The minute now this contribution is equal to fixed cost, remember this will be in total. Let us say we sell a number of units, 100 units or whatever the case might be. The minute we multiply this by the number of units, and this is equal to our fixed cost. Therefore now that means the company will be at the break-even point. Hence the calculation of the break-even point, it says fixed cost divided by contribution per unit. Therefore now this is the amount that will be contributing to fixed cost for every unit that we sell. So now that was in response to the second question where they said for every pair of roller blades sold during the quarter, what was the contribution towards covering fixed cost and towards earning the profit? So now when they say towards earning the profit, it means when this total of 240 for every pair of roller blades we sell, when this 240 is then now equals to fixed cost, then the company will start making, is equal to fixed cost, the company will be at the break-even point. The minute now they sell one unit, therefore now this 240 then start to become a profit because variable cost will remain there at all times, but fixed cost, they are fixed, they remain the same. But when they are covered by the total of this 240, therefore now the remainder of the 240, which is contribution per unit, will start contributing to the profit of the business. So now that's exactly what they were just asking, but the explanation was not required. They just wanted to know how much will be contributing to fixed cost and contributing to profit when this has covered our fixed cost. So now that was a bit of a very short video. Let me say, guys, thank you for that. Hope my insight on this contributed knowledge to your understanding. Thank you. God bless you. Don't forget to subscribe to my channel to get more updates on the latest videos that might change your understanding of costing. Thank you.